Goldman Sachs and Blackstone strategic partners have saddled up. They're growing their investment for apartments. They have involved roughly $600 million properties in 2 Sun Belt states. With the partnership, New York-based Ashcroft Capital plans to buy an additional $100 million in apartment properties. The current deal includes debt, new equities, and assumption of existing mortgage for properties that have a total of 3,250 units in Texas and Florida. Now, for Goldman Sachs and Blackstone, the partnership puts them in older properties. Ashcroft Capital focuses on value-add deals with properties built in 1980s generally, and those built between 1995 and 2010, which are dubbed Core Plus. Both property types involve making upgrades to boost rents and income for investors. Kind of a segue what we were talking about before when we went to the CRELA networking event, where what was the hot topic?
Multifamily
for
lending
one.
for 2.
Lending for 2, and what was 3?
And you know,
what type of lending?
Yeah, what they're pivoting to, going down to Class B, C stuff.
Older property, repositioning them, which is kind of, we're seeing it right here. The firm has bought apartment property totaling more than 14,600 apartments since it was founded 7 years ago. It bought 11 properties last year alone in Georgia, Florida, and Texas, adding 3,500 units. This year, the firm is looking to add up 15 to 20 properties with an eye towards expanding into the North and South Carolina, Arizona, Colorado, Tennessee, and Nevada.
This is kind of what happened in the single-family atmosphere, where the big guys, big dogs, institutional players went in there and bought up all these single-family houses and then put them all online for rents.
Yep.
And now everyone, institutional lenders and players aren't usually in the BC market, and definitely not the C. And here you go, Goldman Sachs and Blackstone partnering up to go after value-add deals in the 80s, you know what I mean, built between 1995 and 2010, I guess. So, this is interesting. It kind of sucks because this is I don't know how big the properties are.
It doesn't really say. It just, it kind of really, because the article kind of, the way it cuts off, it's I want more. Because the way it ends, it goes, the deal fits with the firm's strategy to buy properties in the suburbs of large cities with a strong job growth. CoStar research shows the vacancy on these properties at 2.6%. Now, I'm sitting there going, all right, what are the big cities? What are the cities that you're focusing on? You say Florida, Texas, right? Well,
Sunbelt, yeah.
And Sunbelt. Now, when I look at this, I'm sitting there saying, all right, I can see the demand for the BC product, especially if they're renovated, because you're going to get a little bit of, you're not going to get the luxury amenities you will get in the Class A properties, right? You just straight up apartments. If you have built-in washer dryer,
they're chasing that rent growth.
The rent growth with the people who can't afford the Class A product, where they're going to go, right? The nicer BC product.
Yeah, but not this. This isn't what they're talking about. I know what you're saying, but no, this is not what that is. This is built in, the 90s and stuff like that.
Yeah, this is older
stuff.
They're
allocating. These guys are smart, right? And they're saying they're seeing this as an opportunity right now to go allocate funds that they normally wouldn't go after, chase after this stuff. They've got the teams to do it, and they're just going to take over this.
Yeah, but something, it kind of ties into it kind of ties into what these lenders are focusing on right now. They're shifting their focus to this product.
Well, like they said, the negative leverage gives them that opportunity. So if you have one thing is about having negative leverage. Next thing is about having negative leverage with an opportunity to raise that rent, allocate some CapEx, and then get to that higher cap rate or that
correct,
debt yield
would lead to the higher debt yield on the takeout.
Yep.
So it's kind of cool, like we're starting to see now, and it kind of helps the neighborhood too. If you get some of these properties, they're coming in, they're fixing them up, they're investing some money into it. It all ties in together with helping out it is more of the suburbs though.
But don't get it wrong, because there's still people chasing that Class A stuff. So here you go, a sale that just happened in Jupiter, Florida, which is the most North Palm Beach city in South Florida.
Yeah.
Says Bainbridge. This is from The Real Deal. Bainbridge and TPG team up for $161 million purchase of a Jupiter apartment complex. The price per unit comes in at $530. This is Abaco rental community. 340 unit rental community. $530 per unit. That's a big number, man.
That's a huge
you
number.
know, and it used to hear that number just happening down here in Miami-Dade. Then it started kind of, sprawling up to Broward, and now you're getting that big number up to, Palm Beach County and Jupiter. That's where I grew up. It's pretty amazing.
It is. I mean, we're talking Jupiter. I mean, it's interesting to see, what is driving this number. What is the demand for such a high, price per unit in Jupiter? Because what's the driver to Jupiter, right?
Jupiter's awesome.
Well, yeah,
Jupiter's a beautiful.
You've
never been there.
I've never been there, so
beautiful
I can't.
Town. It's got a college there. It's got the beach life. It's got the farm life. It's literally a great place to grow up. Right? And not when I grew up, it had nothing like that. I'm talking skate parks, surfing, horseback riding. You want to play golf. You want to go in your boat. Everyone has a boat. It's got waterfront properties. Jupiter Island is one of the most expensive places you can live in Florida, with Tiger Woods and Pelosi just bought a house there. And this is even beyond Palm Beach Island, because it's bigger. Jupiter Island's bigger.
Right.
But Jupiter is super nice and it's new.
So 532 unit. Though that's
okay.
I
so
mean,
530.
When I say that number, you don't think Jupiter.
Hold on, I do, because I know what it is, dude. You got to go there and see.
Well,
it.
maybe that's
It's
just
a
me,
beautiful,
Miami guy.
It's a beautiful place, man. I would say Jupiter and all is way. It's almost like going to Coconut Grove or something like that, but that's all of Jupiter. There's so many more nice places in Jupiter than there is in Miami, for sure. Absolutely. It just doesn't have a city. You know what I mean?
Right.
It's a beautiful town. You got to check it out for yourself. But that's 535 there in Jupiter. And then we come down to here in Miami, and don't get it twisted, because Miami does sell at big numbers, and we're talking about multifamily. Emco's spinoff Air Communities pays $211 million for Bayfront Edgewater rental tower. Edgewater is just north of the downtown CBD in Miami-Dade County. It's a 28-story, 296-unit, sold for, get this, hold on, let's wait, $713,000 per unit.
Wow, dude.
Yeah.
That's
$713,000. 535 in Jupiter was big. 713.
That's huge. And Edgewater? Wow.
It's a nice number. It's not even on the water. You have views of the water. It's close to the water, but it's not immediately directly on the water.
It's not unobstructed. You're going to have views, but 730.
It says Mill Creek Residential, with offices in Boca Raton and Dallas, sold the 28-story building at 2150 North Bayshore Drive after completing it last year. In 2021, it built on almost a 2-acre property that includes former site lot of the Edgewater Landmark Unity on the bay. That was a church. According to the property records, that church has since moved to another location at 137 Northeast 19th Street. But yeah, so Amco is they've been buying a lot. The purchase marks the third multifamily property that AIR, led by CEO Terry Considine, now owns in the area the south of Watermark and the Arts Entertainment District. AIR owns the 39-story, 471-unit Bay Park apartment tower at 1756 North Bayshore Drive. Both Bay Park and Watermark are near Maggard Pace Park. Shortly before Denver-based Amoco spins off of its apartment communities into AIR in 2020, Amoco paid $89.6 million for the Hamilton on the Bay apartment tower. That's the one that we worked on.
Yeah, they're very active in this market. This is what, the third or fourth deal we've seen with them.
Well, yeah, they said that's the fourth one. That was developed by Carnival Cruise line founder Ted Arison, 555 Northeast 34th Street in Edgewater. And then it says the deal included a nearby vacant lot, an adjacent small rental building. Last year, Amoco canceled the leases at the 28-story. That was a big thing in the news.
Big deal. Yeah,
people were pissed off. 271-unit building that had been in some despair, and they went on a shopping spree, scooping up additional properties along the 34th Street. In May, Amoco filed plans for a 60-story, 241-unit waterfront rental tower on the site across from Hamilton on the Bay. And it says AIR's website now lists the Hamilton as one of its communities. South Florida's multifamily market is booming. High demand has allowed for skyrocketing rents and prompted investment and development interest. And then it says, also in Edgewater, New York-based Kushner Companies, in partnership with PDM Partners, plans a 3-tower mixed-use project with about 1,300 apartments in 2000 1900 Biscayne. We worked on that as well. Yeah. Overall, more than a dozen projects with a total of roughly 6,000 rental and condo units are on tap in Edgewater.